Welcome to this earnings special. We have with us Chanda Kochhar, the CEO and Managing Director of ICICI Bank. The bank has just posted a 17% rise in its net profit in the first quarter. Chanda, no complaints about the bottom line with that 17% growth, but advances growth, it's just about inched up from 1,81,000 crores to 1,84,000 crores in 3 months. Would you say that at least now there is a growth path? Overall advances will definitely grow from here on?
Yes, Lata, clearly overall advances will definitely grow from here on because now these are 2 sequential quarters where our loans and advances have started growing. And even this quarter, while the growth appears to be only about 7%, but what I would want to explain is that within that actually our corporate book has grown by almost 30%. We just have to remember that we have a large retail book and just the sheer regular repayments in the retail book are also pretty large, and therefore in spite of doing large disbursements, the net growth did not appear that very high. But as we go forward, even the further disbursements on housing and car loans will pick up, and I think the trend on the corporate disbursements will continue to remain strong. So we will see a healthy growth in loans and advances during this year.
Would you want to give a number, a target that you have in mind for advances growth?
For the domestic book, clearly I think the growth would be around 20%. But on the international side, maybe the growth would be lower. But I would think net, taking both these into account as well, our total loans and advances should grow between 15-16%.
I have a couple of more questions on the growth areas, but let me come to the only worrying number in your P&L. The gross NPAs have gone up by about 350 crores or thereabouts quarter on quarter from March to June. Is this one big slippage and therefore can be taken in the stride, or is this a set of restructured accounts that are giving you trouble?
No, nothing at all. Actually, I think on the NPA side, we have all the good news to share. The accretion to NPA is actually much lower than last year. In fact, you are looking at a 350 crore number, but we have to remember that till last year, we also used to do write-offs. But after the clarification from RBI that, write-offs are not really included in the coverage ratio, we have done no write-offs this year. And therefore, the number really appears as 350 crores. But, you cannot compare that to the last year's numbers because, as I said, we're comparing apples to oranges. But what you should see is that our provisions for this quarter have again come down and come down substantially. It's about 790 crores. And our net NPA ratio has come down quite sharply. It's now 1.62%. in spite of a very minimal growth in loans and advances. So this clearly shows that actually the trend on the NPA is very, very positive. In fact, the peak of the credit losses in addition to NPA is behind us, and this is neither a one-time slippage nor any trend that is worrisome at all. In fact, it's only a positive trend. Even on the restructured side, I should tell you that actually the restructured portfolio has come down during the year because some accounts have only got upgraded.
I certainly have to give you credit that the net NPA ratio has come down to 1.62 and it was at, I think, 2.2 year ago. So that's a fairly...
2.19, yes.
So substantial fall in terms of net terms. You think you will end the year much lower? You think it would go towards 1% mark?
I will not give you a number, but yes, I will confirm that we will end the year lower than this number.
Okay. Well, what about some specific growth areas? Has the reduction in the credit card account ended? Have you all started growing in that space? Also, retail book otherwise, has it grown?
Yes, reduction in, the unsecured, whether personal loan or credit card, that has ended. And, so that portfolio is kind of stable. Our disbursements on home loans and car loans have grown actually very healthily. Our disbursements this quarter on home loans were almost double of the disbursements in home loans done the same quarter last year. So that pickup has also started. But as I said, the retail book has not grown very much because we have also had the regular repayments that come on our housing book. And if you remember, on the past book, the housing book is very, very large, and it's just the regular repayments that come in and do not really show up, therefore, as a net increase in the retail book. But clearly the disbursements are at a growing trend, and we will see this showing up in the net growth of loans and advances much more in the coming quarters.
So what would be the net interest margin in this quarter?
So we've ended the quarter with a net interest margin of 2.5, which is better than 2.4 in the same quarter last year. And of course, in spite of the fact that in this quarter, as you know, the savings bank interest rate is actually calculated on a daily average basis.
Absolutely. Well, you did indicate that, I'm not comparing apples and apples when I look at the gross NPA number. But were there any fresh slippages in Q1 itself? I think the Q4 slippages were around 700 crore. Has it been much less in Q1?
Yes, it has been less in Q1.
Okay. Well, finally, Chanda, what kind of a mood are you looking at in the year underway? Are you looking at a fairly substantial growth in terms of corporate India itself? What kind of corporate book growth are you looking at?
Actually, on the corporate India side, I'm very, very bullish because there is, of course, there is a lot of investment activity that has already started. We are seeing clearly an increase in approvals. We are seeing increase in the activity on investment in projects. But what is happening is that the initial activity of investments in projects is getting really funded by the cash accruals. If you see the cash accruals of, some of the companies that have declared results, it's up at least 22% on a year-on-year basis. So there are healthy cash accruals which are going into finance the initial expenditure on projects. But of course, we have also seen an increase in non-fund activity where people are opening capital goods LCs via the banks, and that gives me to believe that the activity on investments has definitely started. Therefore, I'm very hopeful that the approvals that we have made during the last 2 quarters will start translating into disbursements during the second half of the year. So I'm pretty bullish about just the sheer rate of activity of investment from the Indian corporate sector, and therefore I think the GDP growth rate is also going to be strong, and the credit growth rate is also going to be strong. It's just that this first quarter for the industry, I think the credit growth rate has not been too broad-based. It's really been specific to certain sectors, but it should become broad-based in the next quarters.
Well, Chanda, I believe I'm running out of time, so a very quick question. I understand you have raised your deposit rates by 25 to 50 basis points. How long will it be before lending rates also start rising?
I think during the year, lending rates definitely have to rise. There is clearly an upward bias. It's just that an initial increase in deposit rates does not immediately translate into increase in the overall cost of funds. But, with a lag, I think the lending rates will go up. My expectation is that it's in the second half of the year that you will really see lending rates going up.
All right. Chanda Kochhar, thank you very much for joining us, and congratulations on the incremental improvement in your balance sheet.
CNBC TV 18 Boardroom, presented by Suntech Realty Limited.